Hello, fellow RoboCapitals. Hope you're well. I am back with my good buddy Chris Irons from Fringe Finance, and we are here to do a deep dive to the extent that we can with the quote-unquote reciprocal tariffs and what on earth is happening to the markets right now. Gold, the dollar, the Dow, the Treasury market, the 2-year, the 10-year, Bitcoin. I mean, we got a lot to talk about, Chris.
Yes, we do.
Any thoughts on Liberation Day?
Yeah, I'm arguing with somebody right now on text message about it, actually. I'm just, to be honest with you, I'm waiting to see what he says here because I get his point. But yeah, my thoughts on Liberation Day are as follows. Anytime you disrupt the status quo, I just wrote about this. People are very against change, whether it's taking a detour going to work or, changing the way, the handles on your sink fit or whatever. Change is always going to be uncomfortable for people, always. And that's inconsequential bullshit change. When you change things on a big scale, it becomes very uncomfortable for people. And specifically, when you change things on a big scale in an industry and under the umbrella of economics, where all of our short-sighted policy has told everybody that they're entitled to be comfortable at all times, all day, every day, and markets only go up and not down, and that we have academics who have figured out the solution to creating a never-ending utopia. All we have to do is just listen to the Fed and the Treasury. When people have been conditioned to expect that, it only takes the slightest thing to break their brains. And I think we're seeing a lot of that.
I'm not sure that tariffs on 180 countries are the slightest thing, are they?
That's not what I'm talking about, George. That's not the point I'm making. It's not. It's a huge consequential decision, actually. Yeah. The point I'm trying to make is when you take a huge consequential decision like that and you deliver it to people who have been conditioned to panic at the slightest change,
right,
then it becomes a monster 10 times bigger, yeah, right, than it was in reality. So that's the point I was trying to make.
Yeah, what I've tried to do, and we'll go into the countries. I'm not going to go over an exhaustive list or anything, but there's a few that I want to point out because from my standpoint, I'm trying to figure out what Trump's rationale is, because you can't just say it's reciprocal tariffs because he put tariffs on countries that don't have tariffs on the US. And you can't necessarily say, well, it's the trade deficit, because what Trump has been saying in the White House is, well, if we have a trade deficit with XYZ country, that must mean that they are cheating. They have to be quote unquote cheating somehow. But then he put tariffs on countries where we have a trade surplus. So
his rationale is he's posturing, right?
Posturing for what?
His rationale is he's posturing to try to get deals done with countries that are going to be better for the United States than the previous status quo, which was gut middle America, until you have every small town in the country abandoned and everybody left in those towns addicted to fentanyl and booze or whatever.
Okay. So
and to change
from your standpoint, let's take Australia as an example. They have no tariffs against the United States, and we have a trade surplus with them. So why would you hit them with a tariff? And why would you call it a reciprocal tariff?
Because it's the posturing is nothing's off the table, and everybody is kind of getting that same blanket treatment, and let's see who comes to the table first. If you look at like Eric Trump's tweet this
Australia, we're trying to get them to come to the table for what?
I don't know. I don't know what he wants from Australia specifically. I'm just saying, as a broader point, his position here is to posture in a way that is going to let everybody know nothing's off limits and that we are renegotiating trade with everybody.
Okay, but I think this gets at the heart of it, because the only conclusion that I can come to is Trump, he doesn't necessarily want to reduce tariffs globally. Or else, again, why would he tariff Singapore? Why would he tariff Chile? Why would he tariff Australia? I think that's a great example because, like I said, they have no tariffs against the U.S. and we have a trade surplus with them. So I think really when you go down the list of trying to get inside of Trump's head and using this as a negotiating tactic. What is the end game here for him? And I think
the end game. Oh, sorry. Go ahead.
I think
I didn't want to interrupt.
Is he just wants to feel like he has a better deal. So as an example, and he doesn't necessarily want to reduce tariffs. I think he would be totally happy if, let's just say, a country had a 20% tariff on us, but yet we put a 50% tariff on them. In Trump's eyes, that's winning because we have a better deal. Now, the ramifications of that, I don't think he really cares about. It's just the simple fact that on paper, it looks like we have a better deal than they do. And I think that's literally the only thing he cares about. So
I don't think so. I think he's aware of what the ramifications were going to be of this sweeping policy that he put into place yesterday. I think that everybody is acting like we're 50 years into a 100-year depression. It's been one day. I think he knows exactly what he's doing. I think that, this is in essence exactly
what he's doing, Chris. How did the calculation work for the specific tariffs?
Somebody posted about it yesterday. Whatever they use, they use some formula for trade deficit minus exports or something divided by whatever. It's not about that.
And then you got to include into that very precise and mathematical formula Trump's the Trump nice equation, because remember what they did is they divided by 2 or they times by 0.5 because Trump was being nice. So you got to move them into the extreme scientific approach.
I know, and
by the way, they did that quote unquote formula with some countries, but they didn't do it with other countries. And then with other countries, they did something completely different. So I struggle to see the 5D chess argument from Trump. Again, I think it just simply boils down because he wants to think he has a quote unquote better deal. So for Australia, if they have 0 tariffs on us and we have 10% on them, well, that means we have a better deal. And I think he's totally content with that.
Well, in a case like that, you might be right. I don't know how much we import from Australia, and I don't know what Australia's breaking point is. I don't know the specifics of our trade with Australia. I think that, and I didn't say 5D chess. I said I think he knows what he's doing. I think he knows exactly what he's doing, and whether he writes the formula on the back of a napkin as to how he comes up with these numbers, or he just says 50% for everybody or 20% for everybody. I think it's a matter of positioning and posturing. And I think it's driven by the idea that the country and the country's manufacturing has been decimated. When we went through COVID, people couldn't get their prescription pharmaceuticals in this country because the ingredients were made in China. That is
what doesn't have a tariff, Chris.
What's that?
And guess what does not have a tariff? Guess what?
Yeah, I know, but you right, but you want to play these like ticky tacky, like okay, well, why Australia? Why 10%? Why not 12? Why this? Why that? He's taking a broad stroke with a brush here.
To be clear here for the audience, pharmaceuticals are exempt from the tariffs,
as were minerals, right?
I'm not sure about minerals. But
you're arguing like the nuanced point of pharmaceuticals, and I'm making a broader point, which is that we rely on our adversary for things that we need to stay alive in some cases.
Yeah, I get it. I mean, your point is that he wants to bring manufacturing jobs back to the United States. I get it. But my point is, how can you come to that conclusion if his actions against a lot of countries would not lead you to that conclusion?
I don't know what you mean.
Because Singapore, you're not bringing any manufacturing jobs back to the United States.
Well, what about investment? The other countries investing in the U.S. It doesn't necessarily have to be jobs. It can be investment in the United States.
Oh, it can be a multi tariff, a 10% tariff on the imports from Singapore. That's going to somehow bring investment back to the United States.
It could bring revenue to the United States, if, to the extent that these countries continue to export to the United States. But overall, I think it's just a posturing move. I don't think it's going to be this years long, drawn out trade war that everybody thinks it's going to be. I think he's saying we're recalibrating ourselves here from the path that we were on, which, we, in some degree, we have to agree that the path that the country was on and our dependence and our reliance on exporting the dollar to import, cheap crap is a losing proposition at some point, right? Like, we can't continue to do that in perpetuity.
I don't know that that's a losing proposition. I think that's a different debate. But again, I'm struggling to find definitive proof based on Trump's actions that the only thing he's doing here is just posturing to bring manufacturing back to the United States. I don't see how you're coming to that conclusion based on what we saw.
Well, he's also generating revenue, right? To the extent that these countries continue to export to the United States.
Okay, so that's a good point. So,
right.
Okay, but how? Again, I want to focus on the manufacturing point. How is he bringing manufacturing jobs back to the United States by tariffing Singapore?
Singapore specifically, you gave me a list of companies that, Singapore exports to the United States for. Maybe I'd be able to tell you with some intricacy. I'm making a broader argument. I'm painting with a broader brush. I'm not narrowing down my argument to Singapore.
And I understand what you're doing. I'm just trying to figure out what proof do you have based on his actions that his goal is strictly to bring manufacturing back, as opposed to just have a better deal? In his mind, a better deal.
Well, first off, there's nothing wrong with having a better deal, even if that is his end game. But whether it's bringing in more revenue or it's bringing back jobs, I think both of those things were issues that the country needs to arrest. And I think doing it proactively, the way that he's doing, gives him a position of leverage to negotiate with people, as opposed to if the country got to a spot where China voluntarily cut our supply chains, and then we had to go to them and say, hey, what do we have to do to get you to export this shit back to the United States?
Yeah, I realize with China that works. With Singapore, Australia, that didn't work. So I guess maybe with Singapore and Australia, maybe his objective is, well, let's just tariff everything that comes in from those two countries, and it'll at least give us some tax revenue.
That could be part of it. Yes, correct. Or maybe the objective is just to make the statement that nobody's off limits.
Okay, yeah, and he's making that statement extremely well, and I'll show you what I'm referring to specifically here. And this is something that I really got a kick out of, regardless of whether you like the tariffs or you don't, or whatever your position is. This is something that I think I mentioned it yesterday, but I didn't know. I didn't know exactly what was going on. So here's a list of the reciprocal tariffs, the quote unquote reciprocal tariffs. Again, I don't know why he's calling them a reciprocal tariff when they don't have any, the calculation of the tariff has nothing to do with tariffs. That's weird. But the only thing that these tariffs have to do with, as far as the calculation, is just how much Trump or the administration thinks the country is quote unquote cheating. So again, if we have a trade deficit with the country, that means obviously they're cheating. So I guess according to the administration, there should be no trade surpluses and there should be no trade deficits. But we'll shelf that for a moment. The country, I'm not sure it's a country, the territory, and I think it's a territory of Australia here. And we mentioned it yesterday, and it's not on this list. Let me, Josh, can you pull up my Twitter? Do you have that up? There we go. Okay, go ahead and just go to go down to the there we go, that one right there, the usual whales, the black one. There you go. So this is just complete comedy, and I love this here. So Trump administered a 10% tariff on the Heard Island and I believe McDonald Island, which has a population of 0 people and is inhabited only by penguins. So
those penguins have had their boot on the neck of the U.S. economy for too long, George.
I love going over.
We cannot continuing exporting dollars to those penguins and getting their cheap party favors in return.
And this proves absolutely no point whatsoever, other than I just wanted to bring this up because I don't know why, for every single time I read that, I just start cracking up. I think that's it's just, the way they worded that was just absolutely hilarious.
The point it makes is that somebody in the administration made a list of these places and did not look into whether or not, this place had a population at all and said, fuck it, tariff them too. That's the point it makes. And I'm sure that's what happened. I mean, you're asking about Australia and Singapore. Part of it is coming to the table from the decision of nothing's off limits, tariff everybody, and we'll figure shit out later. Let's see who comes to the table.
Right. So let's go through the thought experiment of what that's the benefit here. Let's assume that's the benefit. Let's assume you're correct and this is what he's trying to do. I disagree with that based on his actions, but we can agree to disagree. But let's assume that his main objective here, the main end game, is to bring manufacturing jobs back to the United States because it's better for the economy. It's better for self-reliance. And in the process, if we can offset the deficit, then that's just a win-win-win. So right. Those would be the benefits to this. What would be the cost, Chris?
The cost is it's going to be very disruptive, and that the disruption could cascade to, first off, there could be several costs. The first is that we may actually have supply shortages in the U.S., depending on how long these tariffs stay in effect. So, okay. We'll know exactly how much shit we're importing to rely on our quality of life by exactly what disappears off the shelves. We got a taste of it with COVID when you went to Target and half of the items on the shelves were missing because the supply chains have been shut down. And so it's going to be, there will be some discomfort in that regard. As far as the economy and, you get positives and negatives, right? The Atlanta Fed raised their GDP target today, ostensibly coming from the thought process that, there will be more manufacturing, more productivity here in the U.S. The other downside would be that financial assets could plunge, and that could cause a shit show on the way down because then you find out really who's swimming naked, where the leverage is, and things like that. On the contrary, a recession in the United States could give the opportunity or, complete financial asset destruction of some sort, 50% or whatever, would give the opportunity to a whole new group of market participants and arguably people in the lower and middle class who have been priced out of markets, priced out of real estate, never had the opportunity to buy anything at any sort of value price to come in. And so you would see the wealthy suffer disproportionately versus the lower and middle class. It's almost the opposite of the wealth effect that happens as a result of monetary policy. Our printing and importing everything has resulted in a widening inequality gap and the lower and middle class getting brutalized. Well, here, the people with the financial assets bear some of the costs. These multimillionaires have to watch their portfolio go down 3%. But today, there's a lot of people on Main Street in Bethlehem, Pennsylvania, or outside of St. Louis, Missouri, who are in the bottom 50%, the bottom 25%, where life hasn't changed at all for them because they don't have investments. So they don't give a fuck what the stock market's doing today. All they know is that their uncle or their grandfather used to work at the plant across the street that used to make paper towels or tape or whatever it was, and that plant is closed now. So the trade-offs kind of go from, they stop brutalizing the middle and lower class so much, and they kind of disproportionately hit the top 10% and top 1%. And that's this guy that I'm arguing with now on the phone before I picked up the thing. He's like, it's just, I just don't see, the harm being worth it. And I'm like, well, if you lived in poverty, maybe you would, but you don't. You live on the Upper East Side.
Though, if the unemployment rate goes up, let's say 7%, that's probably going to hit you.
For sure. But this is short term, right?
Yeah. Okay.
This is. Do we want to focus on the unemployment rate, for the next 3 months, or do we want to focus on the next 50 years of what's going to happen in this country?
That's a good point. Let's focus on the next 50 years, because this is an example. I was doing a whiteboard this morning. I use this as an example. So this, I think, really summarizes my position. And the reason I wanted to go through that for the audience, Chris, as you know, is because I really try to get, regardless of what your view is, the point is, I try to get people to go through a thought experiment where they're not just focusing on the costs, or they're not just focusing on the benefits.
Right.
But they're actually looking at both, and then looking at it in trade-offs, where in today's day and age, we're so tribal, and we've got such a political divide that you're either on this team or that team. And then if you're on this team, the only thing you do is focus on the costs. Like if you're anti-tariffs, as an example, right, the only thing you do are focus on the costs. And if you're pro-tariffs, the only thing you do is just strictly focus on the benefits. And that's not a thorough analysis, regardless of what your conclusion is. So that's why, audience, I like to go through this. But as far as my view, I think this
is the first time, George, this is the first time at any point that I can remember that we've done something with fiscal policy or monetary policy that made me feel like we were looking out 100 years instead of just trying to make sure everything stays complacent for one more day. But the consequences from that complacency, they take effect. I don't know what the fuck's going on with the fireworks. I must have done something with my hands, but it's a feature, not a bug. But no, honestly, this is the only time I feel like I can remember we made a decision with like a 50 or 100-year outlook versus trying to maintain the status quo. Hey, let's not shake up the market today. Let's not shake up macro today. Let's not shake up, whatever it is today, to just make it to tomorrow. And that's by 1,000 cuts also.
Yeah. So again, I want to be clear. I don't agree with you on Trump's rationale based on his actions. Now, if he would have just focused on countries that, let's just say we have a trade deficit, okay, I would kind of get that. I don't agree with it, but I kind of get it. Or if he focuses on countries that have a tariff against the United States, and therefore this actually is a reciprocal tariff, and he wants to even the playing field, because on an even playing field, he feels the manufacturing will come back to the United States, I would get it. But this encompasses so much more than that. It leads me to believe that there's something else going on here. So I've explained that. But for the audience,
well, what do you think is going on other than him making a broad statement that the country needs to renegotiate its relationship with everybody around the world? And if he can get a better deal, if he can get the exact same trade surplus with Australia that we had 2 days ago, and we can get a 5% tariff on top of that, and what's wrong with that?
No, I think that's his line of thinking. I do, but I think that's where it ends.
What's wrong with that?
Well, let me outline that. So I did an example for the whiteboard video this morning where I went over peanut farmers in the United States. Now, I don't know if you know this, but peanut farmers have been, and this precedes Trump. So I wanted to find some sort of tariff that we had in place to other countries that preceded, let's say, 2017. So we have this peanut tariff basically in the United States, where if a producer, let's just say in South America, Brazil, if they bring in, or if they import, or if they export, excuse me, if we import more than a certain amount, then the tariff on those peanuts is 100%. 100% tariff. So the reason we're doing this is obviously to protect peanut farmers here in the United States against the, let's just say, competitive advantage that Brazil has. In this case, let's just assume that it's cheap labor. Okay.
Right.
So this is your point, Chris, is this is an example of a tariff that's being set up that obviously has a benefit to American peanut farmers. And now we aren't
to our top line.
Yeah, now we aren't as reliant on Brazil and other countries for the peanuts that we use in, let's just say, peanut butter. So based on that, this is the tariff argument in a nutshell, no pun intended, but this is the tariff argument. See how I did that? And that is looking strictly at the benefits. But now let's take it to another step here. So the United States, or in the United States, and I'm just going to focus on peanut butter.
Okay.
Oh, and by the way, there's 4,900 peanut farmers in the United States that are obviously receiving this benefit. And this absolutely is a benefit to them. There is no disputing that. So this protectionism, if you will, is benefiting 4,900 peanut farmers. In the United States annually, we buy 578 million jars of peanut butter. So with that 100% tariff on a certain amount quota, let's just assume for a moment that's adding $2 of cost per jar of peanut butter, just to keep the math easy. So what we're doing there is we're costing the American consumer, really the poor and middle class, disproportionately. That's a bigger portion of their paycheck. We're taking $1.1 billion away from them just to support 4,900 peanut farmers. So just doing the math there, we could literally give the peanut farmers $100,000 a year to not farm at all. And we would be saving the American taxpayer $124,000 a year. Because if you take the 1.1 billion and divide by 4,900, you're right around 224,000. So is this benefiting those 4,900 peanut farmers? Absolutely, unequivocally, it is. But at what cost? Because it's costing, let's just say, 150 million Americans a certain portion of their paycheck every single month that go to the store and buy that jar of peanut butter. So my point there is, even looking at this over the long term, assuming that Trump keeps these tariffs in place, which brings manufacturing back to the United States or protects American jobs, it isn't a clear-cut case in my mind that this is a net positive. And that's just kind of a simple example that I can use to illustrate that point.
So you're assuming that the behavior of the consumer doesn't change at all as prices go up, and you're assuming that the importer doesn't bear any of the costs of the tariffs.
The American consumer, well, I guess they could buy something other than peanut butter, but they're still buying.
They could buy almond butter. They could buy, But right, I get your point.
178 million jars right now with the 100% tariff.
I get your point. Yeah, I get your point completely. And also too, like there's some, Jim Rickards just did a great interview with Julia LaRoche where he explains why he thinks that tariffs are deflationary and not inflationary in regard to prices. I wish I had paid attention a little bit closer than I did on my run yesterday, because maybe I'd be able to put forth a coherent argument here, but I can't, so I won't.
Deflationary.
Okay. All right. Well, maybe you should put yourself on both sides of the split screen and have an argument with yourself. Yeah. No, I totally get your point. I totally get your point. All right. And you make a good point. And the question is, how long will these tariffs stay in effect for? Will there be rejiggering based on products, industry, services? Will you get into the nuance, nitty gritty of all the things that you were talking about earlier? Like, I completely understand the case for why tariffs are inflationary. Totally understand that. And so I get it. It's a trade-off.
Yeah. So and to be clear, I'm not saying they're inflationary, but they are inflationary. They raise the price of some of the goods that are most impacted by the tariffs. And then yesterday I discussed the example, I think is another thing most people can relate to. I believe we put a 49% tariff or 47% tariff, something like that, on Vietnam. And I was reading on CNBC that the majority of Nikes, I'm assuming quite a few other
like 50%.
Yeah, come from Vietnam. So, you could go, and I think you were talking about this earlier, we could go into a Foot Locker in 6 months, and you're going to have a quarter of the supply that we have today. And it's going to be very similar to walking into a grocery store in, let's just say, 2020 during the cerveza sickness. So I guess your point would be, okay, we're going to have a lot fewer goods and services, let's just say for the next 2 years, but then we're going to bring all the shoe manufacturing back to the United States. And, you fast forward 5 years, and then we're going to have just as many shoes, but all those shoes are going to be made right here in the United States of America. And I understand that point. Another thing that I would encourage the audience to think about is, how many people do you know that are lined up to get a manufacturing job working on an assembly line putting shoes together? Maybe, maybe not. And then
I don't know. Both of my uncles manufactured paper towels and tape for a living.
Yeah.
So,
Yeah, and again, maybe there are a bunch of people end up waiting to get those jobs.
If Nike opened a factory in Kensington, in Northeast Philadelphia, I bet you could find 1,000 people to stock it with that want minimum wage jobs with some type of minuscule benefits.
Right, and then we go back to the peanut farmer, because then when you go back to Foot Locker in 5 years, those pair of Nikes are not going to cost you $150. They're going to cost you $300. And
good. Who fucking needs them anyways? I just don't understand what's going on with this shoe bullshit. People are buying and trading shoes like they're fucking playing cards. It's just ridiculous. This is like decadence. It's insane. People with $1,000 Nikes on the shelf. Good. And if people go out and they'll buy fucking Skechers, or they'll buy whatever's manufactured in the United States, or they'll wear cardboard on their feet like my great-grandfather used to do when he walked to school uphill both ways. We need to be a nation of rugged individuals, not a nation of pussies that are worried about our fucking, Jordans costing an extra $100. First off, if you're spending $150 on shoes to begin with, you got too much fucking money or poor spending discipline, one or the other. So maybe it'll correct that problem.
Right, but it's going to impact the goods at Walmart, Home Depot, all the places where poor and the middle class like to shop. So my point here is not just to drive home my position on tariffs. It's really to get the audience to not only consider this from a standpoint of the American worker, but also consider it from the standpoint of the American consumer. Because at the end of the day, they're one and the same, aren't they? But the thing is, though, with the protectionist policies, you're not going to bring back enough jobs, in my view, to offset the cost to the rest of society as far as having to pay the higher prices, and also, maybe even more importantly, deal with the lack of supply. Because at the end of the day, that's wealth, right? It's measured in the amount of goods and services we have access to. It isn't measured in the amount of money we have, currency units, gold, silver, Bitcoin, etc.
I just want to say, can we give it 2 weeks instead of 24 hours? All right. The NASDAQ was down 5% today to the same level it was at a month ago. It's up 150% over the last 5 years. Tariffs are different than what we did before. I get it. Things are a little bit different today, but I don't know. I stepped out of my apartment and everything kind of just looks exactly the same as it did yesterday. Will there be consequences 3 months down the road if this continues? Will I not be able to get the same brand of toothpaste? I don't know. Maybe. I don't think that that's going to happen. I think this is a move to posture, to get people to come to the table, to try. The country is fucking broke. The country is broke. We run a huge deficit every year. We're $37 trillion in debt, and we don't make anything here. And nobody has done anything, to the best I can see, over the last 3 decades to remediate any of those problems. And so here's somebody who is, in essence, in some way, trying to remediate one of these issues and really tackle the other two. He's trying to tackle the deficit to the best I can tell, and it's made people slightly uncomfortable for 23 hours now at this point. All right, let's give it 2 weeks and let's see what happens, before we start worrying about the price of peanut butter and everybody freaking out about stuff. Let's just give it 2 weeks and let's see who comes to the table and let's see what kind. He put tariffs in place during his first administration that the Biden administration kept because they brought in so much fucking money. They were bringing in like $400-500 billion a year. So let's just see what happens before everybody starts panicking and freaking out about everything,
Yeah, but I don't know that I'd measure success based on how many countries come to the table. I would measure success by manufacturing jobs. So, regardless.
No, well, what if a country comes to the table and they say we're not gonna provide any manufacturing jobs, but we want to pay you, X amount a year as a result, or we want to guarantee your security in this region, or we want to enter into a deal for this, that, or the other. There's a million other ways to have success other than bringing manufacturing jobs to the country.
Okay, I thought we were just focusing on the long-term health of the U.S. economy through manufacturing jobs. If we're looking at it, I'm just trying to figure out.
Well, the health of the economy can be positively impacted by an increase in revenue, right?
I don't think so.
No, so more revenue is not good.
I don't. You've got an unlimited demand for treasuries, so I would like to see less government spending.
So why don't we run $10 trillion deficits then?
Well, because it's going to distort the economy would be my argument. So again, it's the government spending, it isn't necessarily the debt. Now, if you're asking me how would that impact the bond market or long into the curve, I don't know that it would.
I'm just saying it's been 23 hours. Let's see what happens.
But what I want to do is in my mind, I want to try to figure out, okay, what metrics can I look at to determine whether or not this is successful in a year, 2 years, 4 years, 5 years, whatever it is. And I think that manufacturing jobs, that's one thing I like about these tariffs.
Sure.
There are ways, as an example, the war on terror. How do you quantify whether or not we're making any progress? It's not possible, right?
Right.
But with this, it actually is possible to a certain extent to determine if we're really moving the needle. And one metric for that is manufacturing jobs. So if we,
well, what about the Atlanta Fed's GDP forecast coming up today?
Well, I don't know how much that had to do with just gold imports going down, or
Right.
I don't know, I don't know what their formula is, or it's still negative, but I don't know why it would have gone from, what was it, negative 3.3 or something,
Yeah.
like a negative 1, or I don't know. I would have to look into, kind of the math behind what they did. But I just had lunch just randomly. I was down at this cafe that's a couple blocks from where I live in Medellin, and a guy ran into me there that's a fan of the channel. And so he was sitting there chatting me up for 10 minutes or so, and he kind of told me his quick backstory, which was interesting. And he's got a company in Washington, D.C., and he was complaining to me about how he started this business 25 years ago, he said. And he said that—
What kind of business is it?
I didn't really get exactly the specifics as to what he sold, but he told me that it's getting to the point where he's thinking about either shutting down or selling the business because the regulatory environment has got to the point where he said the amount of profit I make, it doesn't make any sense. And when I started, my margins, let's just say, were 15%. Well, now they're only 5%. And plus I have all these administrative costs. I have these hoops that I have to jump through. And he was going through just this office that he set up in Virginia or something like that, because he had to be close to some sort of government agency because he got a contract or something like that. And he was telling me that he had to have an inspector come in like weekly as he was setting up the office, just because they had to look at like the certain cables that he was using for his internet service and whatnot, just to make sure that they were approved. And then he had to do other things with the county, and then other things with the state. And he just went through that, and it was mind-boggling, the stuff that he had to do before he even started to do business. And he's like, I got to hire people that are on payroll, and I got to hire them workers' comp. And then, these people, I guess he got sued a couple times during the Cerveza sickness. because a couple of his people got COVID, but they probably just had a cold or something, and he made them work. So they actually sued him. So he's like, I'm dealing with all this, and it's like, what's the point? What is the point? So
Right.
it's gotten to the level for this guy where he's just considering tapping out and waving the white flag. And I said, well, what would happen if your competitors that you have from overseas, China or whatever it is, what happens if you have a competitive advantage now because of the tariffs? He almost laughed. He's like, I could care less because I still have to deal with the stupid inspectors and all this nonsense. For him, it really didn't even move the needle.
And he was based where?
I believe is either
based in Colombia.
Yeah, it is in the DC.
Oh, so he's based in the U.S.
Yeah. It was either.
Yeah.
It was between
that
DC and Baltimore and these.
That makes a ton of sense. I mean, regulation's out of control in this country.
That's my point, Chris, that I try to make on this channel all the time, because I don't want to sit here and say I don't like the tariffs from an economic standpoint. Now, I agree with you from a negotiating standpoint. I think they're smart if that's the only lens we're looking at this through. But I think you have to look at all the other trade-offs that we discussed earlier. But the point that I try to make on this channel all the time is I'm not sitting here with a lack of solutions. For me, the solution is just to get this guy, using him as a proxy for entrepreneurs and businesses in the United States, get him back to the level he was 25 years ago. Just get him back there. And I can assure you that that is going to do way more for United States manufacturing and bringing jobs and creating high-paying jobs back to the United States than putting a 10% tariff on an island full of penguins, or Australia, or Singapore, or the UK, or pick it, right? So, and in that case, you don't get fewer shoes at Foot Locker. And in that case, you don't get a higher price of peanut butter. And in that case, you don't get all of the costs, the financial costs that come out of the pocket disproportionately of the poor and middle class, but you still get the more of the jobs. So
I am pro cutting regulation.
Yes, so am I. I'm just
good.
You get my point, is that I would rather focus all my energy on that than focus on the tariffs, because the tariffs, in my view, are going to have a net negative, and then the cutting the regulation is going to be a net positive. And I would argue that regardless of how well Trump negotiates deals as far as these tariffs, if you don't cut regulations substantially, like what this guy is dealing with in Baltimore and Washington, D.C., it doesn't matter how good of a deal Trump cuts, you're still not going to bring those jobs back to the U.S.
Well, I agree with you. I agree with you on cutting regulations, and I think they're doing both.
I hope so.
Well, they are. I mean, that was he ran on an agenda of cutting red tape and cutting regulations. And so the people he's putting
on an agenda of peace, and now he's bombing Yemen. So I mean, I don't, what a politician runs on and what they actually do, I think, are two completely different things.
Well, he's in the middle of trying to broker a deal between Russia and Ukraine. He's, look, I get it. He's been in office for 2 months. The tariffs have been in place for 23 hours. I get it.
Yeah. So main takeaway here, guys, just make sure you're looking at the costs and the benefits before you come to a conclusion, and don't have a bias with this stuff. Try to go in as much as you can with an open mind. I know even when the tariffs came out yesterday, I was up late last night trying to think about what are the positives here, right? And if I was, and that's actually why I came to that conclusion, Chris, that he's probably doing this just to get a quote unquote better deal, just so long as it's a better deal in his mind. Because I was thinking about, okay, if I'm him and I'm doing this blanket 10%, and then I'm doing this calculation with China, and then I'm cutting it in half, but then I'm doing something different with the UK that has we have a surplus and we have these tariffs. Why would I be doing that? What would be my logic? And that was really the conclusion that I came to. And I hope that I've got it slightly wrong. I hope that Trump is trying to get a better deal by reducing all tariffs by lowering all tariffs globally. I hope that's what he's trying to do. And it's not just, I'm trying to get a better deal, even if I increase tariffs globally.
I put at the so I put out an article. I just wrote a column this afternoon called "Your Discomfort Means It's Working," and at the very bottom of it, what I write is, for the strongly opposing view, which I always suggest you consider. You can read a piece, and I link to a piece by my friend Anton Wallman, who I agree with on a lot of things politically, ideologically. And he makes the case for zero tariffs. He makes the case for a complete cut of all tariffs. And so I agree with you that it is important to wrap your head around both sides when trying to come to a decision.
Yeah,
as with anything in life, not just politically, but with investments, if you're long, give me the best short thesis. If you're short, give me the best long thesis. You know, anything, where to send your kid to school, whatever. Get as many cards on the table as you can, and don't be afraid. Somebody commented before, oh, it's ego versus ego. And I don't think that's the case with me and you talking about this, because I don't think either one of us, at the end of the day, gives a shit whether they're right or wrong, as long as the net result is beneficial for everybody. And B, I don't think either one of us is afraid to look at the opposing side of the argument, no matter how vehemently we argue.
Yeah, I mean, I've changed my view on a lot of things. I mean, one of the things, we just discussed as far as the budget deficit impacting the interest rates. I've done a complete 180 on that, just because, and it was very difficult because I was so adamant that this is the way it works with money printing and the national debt, and the supply of treasuries versus the demand for treasuries. And when you kind of start poking holes in that and just gradually say, oh, well, wait a minute, maybe I'm wrong here. You've got two options. Either you can go down that rabbit hole even further, or you can try to ignore any research that might disprove your previous bias and then just double and triple down. And
hey man,
it's a lot easier.
There's nothing I like more than being wrong and getting it. Like, there's no, this is what happened with me in Bitcoin. I was anti-Bitcoin from like 2013 to 2022. And you don't have to agree with me. Maybe you hate Bitcoin. That's fine. But just listen to the point. The point of the story is, I kept reading and reading and reading about it, and I kept watching video after video after video until I understood it in a way that I didn't understand it before. And my position on it changed from it being, definitely completely zero and worthless, that maybe there's something here. I'm not balls out Bitcoin, but my position changed. There's nothing, I don't mind being humbled. If you want to inform me and tell me something that I don't know that's going to change my position, I'm stoked about it. I don't get paid to come on your channel. I don't really care about I write my blog because it's cathartic for me. I feel blessed that I have subscribers, but it's not something, I don't have to keep up some facade of being this guy or that guy in order to keep revenue coming in. I'd rather just be humbled and understand it better and change my position. I don't care, what the fuck?
Yeah, let's go into the markets here, Chris. I know that's not your focus, but everyone's kind of probably wondering about what's happening with the S&P. I think it is very important that we look at Treasury yields, because that, in my view, tells you a lot more about not just the U.S. economy, but the global economy. And then we also want to look at gold, and we want to look at the dollar, which caught me off guard yesterday. And I'm kind of getting it now, but I was very surprised to see the dollar down yesterday. So
do you think Cent is getting what he wants with yields moving, with the 10-year yield moving lower today?
Yeah. So this is, a lot of people have kind of called me out on Twitter for this, and I don't buy that argument. And here's why. Because why do we want interest rates to go lower? Well, their argument is they want it to facilitate and to be a tailwind to growth, to economic growth. That's why they want lower interest rates. Okay, but by causing a recession to get those lower interest rates, you're contracting growth. So I don't know how you can argue that in order to facilitate growth, we need to reduce growth. That doesn't make a lot of sense to me. So if it was just him saying we want to drop interest rates just because, let's just say Donald Trump wants to drop interest rates, then job well done. Job well done.
Right.
But if your objective is to drop interest rates to facilitate growth, then I don't see how you can make an argument that this is a win.
Right.
All right. So now let's go over to the CNBC homepage here, and let's go over what's happening. So the Dow is down 1,600. We'll have to see how this kind of plays out through the rest of the day. I believe the Russell is now in bear market territory. NASDAQ down almost 6%, S&P down 4.8. Now, to Chris's earlier point, it depends on who you are as to whether this is good news or bad news. If you own a lot of stocks, this is probably bad news. But if you don't and you're trying to get into the market, then this is fantastic news. As an example, on my watch list with Rebel Capitals Pro, I've had Toyota there for quite some time. I really like Toyota as far as the company, and I think it's a great play on emerging markets for a lot of different reasons that I won't go into now. But, Toyota was way up in the stratosphere, and now I noticed today it's trading at like a 6.6 PE. And it's starting. I don't know if I'm a buyer here. I think it's maybe 165 or something like that. I don't know if I'm a buyer here, but it's getting a hell of a lot closer to where I would be a buyer, because it's getting into that zone where even if we do go into a recession, or even if Trump does implement these tariffs for another, 2 or 3 years, I still like Toyota long term. And if I'm able to get in at that price, I don't really care what happens over the next 6 months to a year. To be clear, I'm not buying right now, but there are some things that are starting to get a lot cheaper. And for those who have cash and have been on the sidelines, this is great news.
Have you looked at Volkswagen? You get a bunch of great brands at an arguably extreme, insane discount. Some of the parts,
Yeah.
if you break out all of the, you got Porsche, you got they own a bunch of Lamborghini, and that trades at like 4 times earnings. Is down again today. And my friend Mark Spiegel actually makes a very good case. Is some of the parts could be a multi-bagger from where it's at now, which I don't have it in front of me, and this isn't financial advice, but just because you said Toyota, Volkswagen, it's a name that I own and I'll buy if it keeps going down.
Another one I like a lot, Chris, is Louis Vuitton.
Is that LVMH?
Yeah, let me just pull up a chart here real quick to check that out. It's good. See, this is great. It's down. This is one that I have not bought, but is
what's the PE ratio?
It's
21. So that's a trailing PE.
Yeah, so still high.
The nice thing about that is it's a relatively recession resistant industry. It's the same reason I like American Express. The consumer or the clientele is a little bit more on the higher end than most other people, and so it's a little bit more recession resistant.
Yeah, the reason I kind of like this one is because I think if we do go into a recession, the central planners are gonna just execute the exact same playbook, just to a greater degree. And more of a knee-jerk reaction.
And that thing will fucking triple just based on earnings without multiple expansion.
Because it's going to be Stimmies, it's going to be UBI. I mean, I don't care who's in office. If we go through a GFC, or even if we get to a point where the market's down, 30, 40%, and I don't think the Fed really matters, but they're going to drop rates and they're going to come up with more fiscal. And it's not going to be the fiscal where they're building bridges. It's going to be the fiscal where they're sending people checks. And
we agree.
And I remember, and you probably remember this well too, Chris, back in 2021, when they were sending out the stimmy checks, I would go down to the local mall where I was in Arizona, and the line for Louis Vuitton would literally be 100 yards long. Would be 100 yards long. So it was obvious to me that a significant percentage of the people that were getting stimmy checks, or didn't have to pay their mortgage, didn't have to pay their rent, didn't have to pay their student loans, whatever it was, they were taking the additional purchasing power they had, and they were going straight to Louis Vuitton because that's what they see in every one of their favorite music videos or something like that.
Right. Or buying call options or buying fart coin.
Yeah, so I just think that this is kind of a play on the economic distortions that are created by the government intervention that unfortunately, I think will exacerbate the delta between the poor, or the haves and the have-nots. Another way to say that, will increase the wealth gap. I think that Louis Vuitton is a beneficiary of that.
Well, Volkswagen owns Lamborghini.
There you go.
So, and by the way, this whole thesis, putting aside whether or not that's in value territory now, which I'm not necessarily sure that it is, but your thesis makes perfect sense to me. So look, we're agreeing on something.
Yeah, and I like putting things on a watch list, and it doesn't necessarily mean that I'm buying here.
Right.
I'm hoping it does get down to a level. Let's just say this traded at a 15, and I'd want to go back and look at the historic PE as well. But let's just, of course, down to a 15, and then that bumps the dividend yield. I don't know if you can see this, Chris, but it's 2.39 right now. So let's assume that bumps it up to, I don't know, 4. Okay, if I've got the choice between LVMH or at a 15 PE at a 4% yield, or a 10-year Treasury, I'm going with LVMH right there for sure.
Yeah, I'm with you.
Okay, so now let's look at the bond market, guys, the Treasury market. I think this is far more important than the stock market. And this is a big move. I mean, it's down almost 16 basis points, the 10-year Treasury yield today. And why? Because growth and inflation expectations have plummeted in the marketplace due to, due to a lot of things, but definitely as a result, to a certain degree, of what we saw yesterday. So, Chris's point, it's absolutely valid, is this is just the market saying, okay, this is what I think is going to happen over the next 6 months or the next year. Definitely risk off, but it doesn't necessarily mean that this is the growth and inflation expectations that the market is predicting, whatever, 5 to 10 years out. Now, the 2-year Treasury, I like to focus on that, Chris, because the Fed usually follows, not usually, almost always follows the 2-year Treasury. And so obviously, that's what people want to know, is what's the Fed going to do? I think the market is pricing in right now 2 to 3 rate cuts over 2025. And now that spread between the 2-year Treasury and Fed funds has increased even further. Look at this. Actually, this is down 16 basis points today. So we're down to 3.7. And just as a reminder, guys, Fed funds is at 4.33. So we've got a 60 basis point delta here with the 2-year Treasury yield and Fed funds. So, just based on this alone, I think you could come to the conclusion that maybe, or we need to start considering the probability of the Fed dropping more than the 2 or 3 times that are currently priced into the CME. And I think they come with that with SOFR futures or something like that. But basically what the market is pricing in. Okay, now let's go over to gold, which I'm really excited to talk about. And why? Because it's doing its job. And I always look at gold as kind of going long uncertainty. I've tried to figure out what drives the price over the short run, and I don't know if I don't know that anything does to the degree to which uncertainty does. I don't think the inflation rate, I don't think the dollar, I don't think any of those really are highly correlated, at least in the short to midterm. But uncertainty does seem to have a high correlation. And it's not that you own gold because it always goes up. A lot of times you own gold because it goes down a lot less. And it's down 1% today. But I think this is a perfect example as to how it's doing its job. In the sense, when you look at the stock market, down huge. When you look at, pretty much all risk assets are going to be down substantially. But then you've got gold just hanging in there. And so relative to stocks that you might want to buy, gold is actually way up today if you're looking at it through the lens of purchasing power or dry powder.
For sure. And, that selling is probably leverage being taken out of the system. It's probably people,
right? Yep.
right? Probably people that need liquidity, looking for it. But it was off much more to start the day today. I think gold futures were off like $80 or $90. And then it came, the GDX was down like $2 or $1 to start the day. And I think was close to finishing the day green, or was, a lot closer to unchanged.
Yeah.
And so that's, exactly to your point there.
So people probably getting margin call. They got to sell something that's up in their portfolio. So they sell
this
gold.
Morning when you wake up and you see what happened in the futures market overnight, and if you're levered to the tits, the name of the game is sell everything that's not bolted down to raise cash. And it doesn't matter what the asset is, and it doesn't matter what price it is. And so, to some degree, I always wrote, this never really happened because gold has doubled since I started writing about it.
Mm-hmm.
But I always wrote that hey, if you're long gold, to expect that gold would get carried out a little bit in a recession like it did in 2020 when everything. And I remember watching after QE was announced, gold going from 1,600 to 1,400 or something like that, and thinking, wow, it's really, people are really just looking for cash anywhere. And now here we are, not even 5 years later, and it's doubled since then. And so just something to keep in mind, because the printing press is what's next. Like you said, we're kind of regardless of the outcome. Who knows how quickly we'll get there, but rates will go lower. The Fed will print more money, and, ultimately fixed supply assets are going to go higher.
Yeah, that's always your opportunity to buy gold. If you do have a liquidity event in a downturn, and that's the only thing that's catching a bid. So people are selling that because they need cash. It's gold likely goes down a lot less. It takes a nosedive. And that's your opportunity usually to get in at a really good price. I wanted to touch on the dollar, Chris, really quick here. It's 102, and I was surprised because with all these tariffs, I would have thought the dollar would have gone up. But I think what the dollar is telling us is, whether it's right or wrong, the market is perceiving such extreme tariffs on so many countries to actually disproportionately impact the U.S. economy over the short run. Because if it was just a tariff on Europe, as an example, then I think the dollar on the DXY goes up, because
Right.
I think the market would assume that's going to disproportionately affect the Eurozone negatively. But I think because you've got these broad sweeping tariffs, whether we like them or not, whatever, it's just that's how the market's picking it up over, or that's how the market's perceiving it for the next 3 to 6 months, something like that.
Yeah, I agree with you.
Explain that, 'cause I know we got a lot of questions on that in the chat. Okay, guys, enjoy the rest of your afternoon. As always, make sure you're standing up for freedom, liberty, free market capitalism. Make sure you check out Fringe Finance on Substack.
Hey, you got it.
We'll see you on the next video.